This is Nightly Business Report with Bill Griffith and Sue Herrera.
Tech trifecta, Amazon, Intel, and Microsoft trounce earnings expectations, and some say this critical sector is a good investment for your money.
Stocks surge. The major averages get a big lift, even as a number of companies say inflation pressures are mounting.
Teenage hacker, the incredible story of a young man who hacked Russian hackers and is now making millions helping companies defend themselves against people like him. Those stories and more tonight on Nightly Business Report for Thursday, April 26th.
And we do bid you a good evening, everybody. Stocks ran higher at the open this morning, and this time the gains held for a change. Earnings reports from some of the biggest U.S. companies and a decline in the 10-year Treasury yield combined to send the major averages sharply higher. The Dow was up more than 300 points at its peak today, closed up 238 to 24,322. The Nasdaq was up 114. The S&P rose by 27.
And the technology sector led the market higher today. After the closing bell, Microsoft, Amazon, and Intel all easily topped earnings estimates. So we start with Amazon's quarter. The company's results were driven by a surge in online shopping and strong demand for its cloud services. It earned $3.27 a share. Analysts were expecting $1.26. Revenue climbed by 43% to come in at $51 billion. Investors cheered. They sent the stock to a record in initial after-hours trading. Deirdre Bosa has the one key takeaway from Amazon's quarter.
The biggest takeaway from Amazon, the company is firing on all cylinders and says it will continue to deliver profits to investors. Not only are its core businesses, e-commerce and cloud computing, performing above expectations, but newer businesses like brick and mortar and subscription services are growing at a faster clip than Wall Street expected. Amazon, a company that used to sacrifice profit for growth, is now exercising more fiscal discipline and telling investors to expect operating income of between $1.1 and $1.9 billion in the current quarter. At the same time, Amazon is spending big on new businesses, from original content to hardware to groceries, and to gaining more market share in regions like India. For Nightly Business Report, I'm Deirdre Bosa, San Francisco.
Now to Dow component Intel, which reported better than expected earnings and revenue driven by higher demand for semiconductors for data centers. Intel earned 87 cents a share. That was 15 cents better than estimates. Revenue came in at $16 billion. That was up 8% from last year and about $1 billion more than expected. The stock rose sharply in initial after-hours trading. And Aditi Roy has more on Intel's report for us.
A big day for Intel earnings today as the company handily beat analysts' expectations on a number of key metrics. One of those critical metrics, the data center group revenue number, which came in at $5.2 billion versus analysts' expectations of $4.84 billion. That number referring to chips used in servers to support cloud computing systems. It's part of the business analysts are watching very closely, and the company is also investing in, since cloud is a growing category and more industries are shifting towards the cloud. The company also beating on revenue coming from their client computing group, that referring to PC and mobile chips. Two headwinds in this category for the company: competition from companies like AMD and the decline of PC sales. For Nightly Business Report, I'm Aditi Roy, San Francisco.
And fellow Dow component Microsoft also topped Wall Street forecasts on strong demand for its cloud computing services. Its flagship cloud product, called Azure, which competes with Amazon Web Services, posted revenue growth of 93% in the most recent quarter. Azure holds the #2 position in the cloud computing market. The results sent the shares down, though, and then back up in after-hours trading.
So let's dig a little deeper into these tech earnings. Joining us right now to share his thoughts, Dan Morgan is Senior Portfolio Manager and Vice President at Synovus Trust. Dan, good to see you. Thanks for joining us again.
Hi, Bill.
The word we heard in all three reports, cloud. The growing influence of that in the technology world for companies that are not known for. You got retail for Amazon, operating systems for Microsoft, and chips for Intel, but they all are seeing more of a force in the cloud right now, aren't they?
Yeah, Bill, that was the real, picture in terms of these companies. Amazon with AWS, that's their infrastructure as a service. That was up, as you talked about, $5.5 billion in revenues. That was a huge number. Microsoft, who is kind of an old legacy company like an IBM, who's made this conversion over off the desktop into cloud, commercial cloud, did over $6 billion. And then Intel with their data center group up 23%. So all of these companies, Intel, Microsoft, old legacy companies that are making a good transition into cloud. And then, like you say, you have a big retailer like Amazon you don't think of when you buy something off the internet. They're a huge player. They're the #1 player at infrastructure as a service. So really, cloud is a huge force now in technology. And
you make the point, as I look at my notes, that for Amazon anyway, their AWS unit is somewhat underappreciated or not basically valued correctly by the street. Why?
Well, Sue, it's interesting because we do think when we talk about Amazon, we talk about the Whole Foods acquisition, or we talk about them getting into healthcare. We talk about 100 million Prime users, right? We just hit that target recently. So we kind of forget about the fact that they are a huge player in this enterprise area in the cloud space. They are the #1 leader in that. You mentioned Azure, which is Microsoft's product in that space. Also, Google Cloud is in that space too. But they are the clear leader in terms of total projected revenues and growth. So it is interesting that a lot of people don't think of Amazon as an enterprise cloud play. They think of it as an online marketer. So interesting.
The stock price is in the clouds, that's for sure, right?
Yeah.
Sorry.
Yeah.
Thanks, Dan. Appreciate it.
Okay. Thanks, Bill. Thanks,
Dan
Sue.
Morgan with Synovus Trust joining us.
Well, one of the big themes emerging from this earnings season so far is inflation. A number of companies are talking about how they're facing rising costs. Bob Pisani has more.
We're just about at the halfway point for earnings, and they've been excellent. But one common theme that's been raising a red flag is higher inflation. It's been a very hot topic on the conference calls. Now, they're mainly talking about commodity inflation around metal prices like aluminum and steel, and oil prices, which translates into higher packaging costs for many companies. But some are also mentioning higher wages. So Caterpillar this week said it expects steel and other commodity costs to be a headwind all year. 3M saw higher than anticipated costs for transportation and raw materials derived from crude oil. Kimberly-Clark said margins were impacted by significant commodity inflation. Whirlpool said profits took a hit from raw material inflation. Procter & Gamble and Ford, Ingersoll Rand, they also highlighted rising commodity costs. And Avery Dennison, which makes packaging materials, they saw price increases for petrochemicals and paper as well. Several companies like Chipotle separately brought up higher wages as well. So how's everybody coping? A few said they were just going to raise prices in response. A.O. Smith, which makes water heaters and air purification products, is raising the price tags on its products by 12% because of higher steel prices and rising freight costs. But not everybody can afford to raise prices. Autos, apparel, tech hardware, and household personal products are already seeing some of their profits under pressure. All of these sectors are impacted by higher commodity costs. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
And higher commodity costs could ripple through the stock market and the economy over the next week and a half or so. We'll learn a lot more about both with the release of more earnings guidance, economic data, a Fed meeting, and the employment report. So joining us to talk about all of that is Ryan Sweet. He is Director of Real-Time Economics at Moody's Analytics. Also joining us tonight is Michael Farr, founder and president of Farr Miller and Washington. Good to see you, gentlemen. Welcome. Lots to talk about. Ryan, I'm going to start with you. Of those things that I highlighted, which one of the economic reports are you going to be watching the most closely?
Well, over the next week or so, I think there are two key ones. First comes tomorrow, and it's not GDP, it's the Employment Cost Index, which is a very good measure of wage and benefit costs in the United States. And with the unemployment rate in the U.S. trending lower and having nowhere to go but even lower, wage pressures are going to just naturally begin to build, and it's going to put some upward pressure on companies' costs and generate some inflation. And I think the Fed's more sensitive to wage pressures now than they are going to be paying close attention to GDP. And then next week is the core PCE deflator, which is the Fed's preferred measure of core inflation. And there's going to be some favorable base effects, and we're going to get a year-over-year number in March that's very close to the Fed's 2% target. And how markets interpret that is going to be very key in assessing how markets do next week.
And Michael, we heard from some companies reporting this week that they're already seeing raw material costs creep into their business right now. Are you investing as though you're anticipating higher inflation down the road?
Bill, I'm investing looking for companies that can continue to grow. I think you have to price in a certain amount. I don't know whether we're going to call it inflation, but certainly we're going to have higher rates, right? I mean, the Fed has changed direction. That's clear. They're going to continue to increase those short-term rates. The cost of money is going up. That's inflationary. And we saw when we looked at Deere's earnings yesterday, we heard from them that they were seeing higher cost of goods. So I think, you have to listen to Ryan Sweet, too, who says you've got to look at the employment costs because these are going to sooner or later be passed on in end costs and to the consumer. So it's all in there, yes. Margin pressure is what we're going to see.
Right.
All right. So, Ryan, if indeed we get strong readings in the PCE and other indexes, does it change your assessment of what the Fed is going to do, or do you think the Fed would reassess?
I think the Fed's pretty much on course to raise rates a total of 3 to 4 times this year. They've signaled 3 in their summary of economic projections, but in the so-called dot plot, which is shows all the participants' expectations of where the Fed funds rate's going to be at the end of this year and end of next year. If you take out the lowest 2, we get 4 rate hikes this year. And I think with core inflation moving closer to the Fed's target, with the unemployment rate heading below 4% fairly soon, I think the Fed's going to feel very comfortable in where the economy is headed, where inflation is headed, because monetary policy affects the U.S. economy with a lag. So actions today by raising interest rates will affect the economy down the road. So the Fed's got to be very forward-looking. And I think the Fed's trying to pull off a miracle and try to land this plane perfectly on a tarmac. Mm-hmm. The issue is that they're worried that the unemployment rate is going to fall too low and the economy is going to eventually overheat.
Maybe we need Sullenberger to be our
Ryan, isn't there a question that the Fed could overstep? I mean, they did in 1937. They could throw us back into recession. And look, Ryan is a graduate of the University of Delaware. Fabulous program. David Lyons put on the Economic Summit every year there through Carlos Acerta and the Economic and Entrepreneurship Forum. This is a great school. But I got to hear you tell me, do you think the Fed can overstep here and send us to recession?
I do. I don't think it's an immediate threat, not in the next year or two. Usually the risks of a recession really increase substantially when the Fed raises the Fed funds rate, the real Fed funds rate, 50 basis points above the terminal Fed funds rate. So right now markets are pricing in a terminal Fed funds rate nominal of 2.5%. So right. Real, that's about 50 basis points. So we have a little bit of time. Okay. If you look at the Fed's projections, we're going to overshoot just a little bit. But I do think that as inflationary pressures begin to develop, the Fed just naturally, if they've done it in the past, they may panic, raise rates a little bit too aggressively.
Fragile. Yeah.
And then that may be the one that's going to trigger the next recession.
Gentlemen, we got to go. Thanks so much, Ryan Sweet and Michael Farr.
Still ahead, Chipotle entering a new era with a new CEO at the helm. Wells Fargo is reportedly the target of yet another probe. According to the Wall Street Journal, the Labor Department is now looking into whether the bank has been pushing 401k participants into more expensive IRAs. Regulators also want to know if Wells Fargo pressed account holders to buy in-house funds, which generated more revenue for the company.
Chipotle investors have something to cheer about. Yep, you heard me correctly. The burrito chain appears to be winning back customers following a string of E. coli outbreaks more than 2 years ago. Chipotle reported blowout quarterly results that sent the stock 24% higher, one of its biggest moves since the chain went public in 2006. Kay Rogers talked to the new CEO about his plan to breathe new life into the embattled restaurant chain.
All happen. The food looks great.
With the new chief executive officer in place, Chipotle Mexican Grill is hoping to usher in a new era. Brian Niccol, former CEO of Taco Bell, took the helm last month, replacing founder and CEO Steve Ells. Niccol, known for his innovative style of marketing and bringing unique items to the menu, has analysts and investors optimistic he'll be the change the burrito chain, with nearly 2,500 locations and 70,000 employees, needs. Niccol's top priority in the new role, reminding people why they love Chipotle.
I think there are huge innovation opportunities, frankly, across our menu. We need to focus on leveraging the platform that we have. The food is craveable, and I think there's opportunities to use what we have and present it in new forms, new varieties to get people just re-engaged with what they love about Chipotle.
This comes after a string of foodborne illness outbreaks that began in 2015, hitting the company's stock and tarnishing its image.
Niccol says they plan to focus on marketing. Their slogan is food with integrity. They'll also invest in digital and delivery innovations as well as their employees. And they're going to rely on these fresh ingredients that customers have really come to love here at Chipotle.
There's always an opportunity for us to be even more cognizant of the financial commitments that we make, as well as the innovation commitments that we make, executing a guest experience, giving every customer the experience they want and expect from Chipotle.
They're also planning to test out new items on the menu.
Breakfast will not be coming anytime soon, but one thing I can tell you is our food tastes great even earlier than 10:45 in the morning. I think we're going to be experimenting with, can we open a little bit earlier and adding hours on the front end.
So far, investors showing they have a strong appetite for the change in leadership at the brand, as the stock continues to climb more than 50% since Niccol was announced CEO in February. For Nightly Business Report, I'm Kate Rogers in Denver.
Starbucks profit margin shrinks, and that's where we begin tonight's Market Focus. After the bell tonight, the coffee chain said that restructuring costs and an increase in employee benefits caused operating margins to decline. Overall, total sales rose and topped expectations. Company also reiterated its 2018 forecast. Shares initially fell in the after hours, but finished the regular session up nearly 3% to $59.38. Also at after the bell tonight, Mattel said that higher sales for a couple of old stalwarts, Barbie and Hot Wheels, helped sales rise above expectations. Overall, the toy maker did report a loss, but said that it's working on improving profitability and working through challenges caused by that Toys R Us liquidation. Shares initially popped in the extended session after ending the regular day up more than 3% at $13.98. And Southwest Airlines said that bookings have weakened following last week's engine explosion that left one passenger dead. The airline said that that softness was expected, but added that it's probably going to mean a measure of revenue turns negative for the quarter overall. Southwest did report stronger earnings for the last quarter and said it's in a good position to weather rising fuel costs.
If prices continue to go higher from here, we have very solid protection in place. Since December, we've firmed up 80 options for firm delivery on the MAX. And the MAX aircraft is 13 to 14% more fuel efficient. So we'll just continue to look for ways to be more fuel efficient, continue to look for ways to mitigate sharp price increases with our hedging program.
Shares of Southwest fell nearly 1% today to $53.30. Sue?
Bill Pepsi said strong demand in developing markets helped revenue beat estimates. Sales in the company's North America beverage division continue to fall, but Pepsi said it is confident that greater investments in marketing will reverse that trend.
Gatorade went through a bit of a downturn, but has now come back. Mountain Dew has come back quite nicely. So we're really down to getting the Pepsi business back on track. We ramped up our advertising in the first quarter. We were up double digits. And as you see us increase advertising further, I think you'll see the market share performance of the cola business specifically improve as well.
Pepsi shares climbed 2% to 103.26. General Motors made fewer high-margin pickup trucks in the latest quarter, but still delivered an earnings beat. The production lulls were caused by assembly plant changes that GM made as part of its strategy to shift its focus from sedans to more profitable, larger vehicles. During that period, GM said its China market performed well.
We had, an outstanding quarter in China, record equity income of $600 million. We continue to perform very, very well. We're excited about our product launch portfolio there. We expect to see another strong year of equity income in China.
GM shares rose just a fraction to 38.25. And higher oil prices and cost cuts helped ConocoPhillips top expectations. The exploration and production company also reaffirmed its capital budget for the year, and it raised its production outlook. The shares rose nearly 3% to $66.97.
Well, the heads of North and South Korea are meeting tomorrow for the first time during that historic inter-Korean summit. And the meeting's going to take place in the heart of the demilitarized zone. An area that you might be surprised to learn is home to some very big companies. Eunice Yoon is there for us tonight.
We're in the South Korean city of Paju, which is a major production center for LG Display and other LG companies. This complex where I'm at now is the world's biggest manufacturing hub for the panels that go into your TVs. 4/5 of LG's large displays are produced right here. And in 2015, the company announced plans to invest an additional $9 billion to build a new plant right here on the grounds. The thing is that this place is about as close as you can get to the North Korean border. How close? Let's go for a drive. Well, we can't drive any further. The demilitarized zone, the heavily fortified border between North and South Korea, is just a few miles past the river. And we are clocking in at 17 minutes to go 9 miles from those LG facilities. And I think it really goes to show just how vulnerable some of South Korea's electronics factories are if a war were to break out, because any conflict would ripple through the global economy from here. For Nightly Business Report, I'm Eunice Yoon, along the DMZ.
Coming up, he shut down Twitter and says he even hacked Russian hackers when he was a teenager. Now he's telling his story.
After all the news and revelations we've been hearing in the past year, you might think the Russian hackers are unstoppable. But one American 15-year-old actually hacked the notorious cyber criminals. In an exclusive interview right now, this young hacker known as Cosmo the God reveals how he went from being wanted by the government as a teen to raking in millions by helping companies defend against cyber criminals. Andrea Day has our story for us.
So you went by Cosmo the God.
Yes.
Did you feel like a god?
Yes.
But Cosmo the God was really just a 15-year-old hacker named Eric Taylor.
More thrilling than I can even explain in words.
Taylor's revealing his story exclusively to CNBC for the first time. He showed up for the interview with his new business partner, Marshall Webb. They're working on a cybersecurity startup called Path, one of the ways Taylor says he's turning his life around.
So what's your message to American teenagers who want to become hackers?
Join the good side and don't go to the dark side of the internet.
Taylor says he fell hard for the dark side when he was just 12. Then he joined a group of hackers. They shut down Twitter for about an hour in 2012. Taylor says they also accessed customer account data at major corporations like Amazon, Apple, AT&T, and Netflix, sometimes gaining access to customers' personal information. While companies did not acknowledge this access, companies like Amazon did tell CNBC that the security of Amazon customer accounts is one of our highest priorities. Then the group moved on to bigger fish, high-profile targets like Kim Kardashian, Michelle Obama, and Donald Trump.
You exposed sensitive information for dozens of celebrities, politicians. What were you thinking?
All I was thinking was I had nothing to lose and I wanted to make a name.
Cosmo the God was on fire, posting the info on a website for the world to see. Social security numbers, home addresses, even full credit reports.
I would publish a new celebrity every day.
So how did he get the secret info? He says he hacked into a Russian website that had already stolen the data and had it up for sale. Taylor says he convinced them to hand it over free of charge by promising not to take their site down.
So you hacked the Russian hackers?
Yes.
How did that feel?
I was 15 and it felt amazing because I don't like Russia. But I had to talk to them to get in with them, and it worked.
And listen to what he did after he posted the info.
Like, I made the site seem like it came back to Russia, and the media published it as Russian hackers publish U.S. officials. I knew the BI was going to catch up to me.
He was sitting in his bedroom when federal agents busted down the door and took him out in cuffs.
Do you regret publishing that information?
Yes, 100%.
He's now watching from a distance while he says hackers cash in on cryptocurrency.
It's only getting bigger because people want money and they want it fast, and the easiest way is to hijack a cryptocurrency wallet, and there's no trace.
As a hacker, what's your biggest fear?
Having my cryptocurrency wallets hijacked.
So tell me this honestly, is there any bit of you that wants to go back and grab a bit of that action?
Of course, and I think there always will be, but I can never go back to the dark side of hacking.
His latest project, the cybersecurity startup Path. It uses blockchain to help companies figure out if their website is loading correctly on devices around the world. They plan to recruit computer users all over to make it work, offering them tokens in exchange for letting Path access their computer.
We've raised over $7 million in the last 2 months.
And after Taylor was busted at his mom's house, he pleaded guilty to a string of high-profile computer crimes and walked away with probation. That was his 4th arrest and hopefully the last time he says he'll go down for cybercrime. For Nightly Business Report, I'm Andrea Day.
Wow. Before we go, here's another look at the rally on Wall Street. The Dow advanced 238 points, the Nasdaq was up 114, and the S&P 500 rose 27.
I'm guessing he did well in math.
I would think so, yeah. Or statistics or something like that. That does it for us tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Thanks. We'll see you tomorrow.